Good morning, everyone, and welcome once again to our weekly broadcast. I hope everyone had a great time off last Thursday. We felt it was definitely inappropriate to do a broadcast whenever there was a public bank holiday, given that Her Majesty had been on the throne for 70 years. And as we were saying before we come on air, irrespective of people's maybe personal views on monarchies and kings and queens, etc. Certainly to be on any throne for 70 years is something that's worth paying respect to. So we gave it a miss last week, and we're back in today. So welcome today to be joined by our special guest, Lars Singleton. Good morning, Lars. How are you?
Morning, David. I'm very well. How are you doing?
Absolutely fantastic. Feeling slightly like I'm missing an arm today because John hasn't managed to make it in. Usually this is the time when we sort of bounce back and forward on a few things topical, but obviously John's over in America, as most of the regular attendees know. It's about 5 a.m. I think over there, so perhaps just at the minute he hasn't been able to join, but he may well join during the broadcast. But we'll crack on anyway and get into the broadcast. So for those that are here most weeks, you know me, David Johnson. I'm the CEO of Leo Crowdfunding, equity property crowdfunding platform, and my normal resident co-host, Mr. John Corey, runs a company called Property Fortress. John's well known in this property investment space. I usually jest about the color of his hair denotes much experience and many years in this industry. But he's very much the go-to person when it comes to structuring deals and, of course, compliance. So we do this together. It's just like a co-hosting. We do quick market overviews. Sometimes we talk about some things within the world of property crowdfunding. And then we have a special guest, which is really just general to do with property. And that's normally the format. Around 30 minutes, short and sharp. So we'll get on in with it now. If anyone has a question about anything that we talk about this morning, put it into the Q&A. Okay, we don't use the chat box. Get it into the Q&A, and as time allows, we can deal with it. Particularly if it's a question around SSASs. This is a great opportunity for you when we come to Lars's part in a few minutes to ask any questions about the intricacies involving SSAS pensions. So feel free to go ahead and fire your questions in the Q&A about that now, and we'll be coming to it in a few moments. So by way of quick update with the platform, I'm delighted that we have now funded yet another deal. So our Waits House project down in Ferrum, this was a JV between Creation Tech and Asset Bricks. Creation Tech is Hitesh, who's well known to us, to the platform. I think this is now his fourth deal he's funded through the platform, and he JV'd with Rahul Dixit from Asset Bricks, very experienced construction developer. And I was on site about 3 weeks ago now, on the site here in Waits House down in Portsmouth. So this is now closed. We raised 265,700 from 50 different investors. Once again, just showing the diversity of investors, some in smaller amounts, some larger amounts coming into this project. But I know that Rahul and Hitesh are delighted to have so many different investors coming on board this journey with them. So they've already started on site, and of course they'll be kept up to date as we go along. For those that did invest in this, you'll obviously be getting your share certificates issued in due course, and then normal monthly updates. Also delighted to say that the Aldwick has now fully funded, and it is 101,800 was raised for this, 43 investors for an HMO conversion down in Bognor Regis. So that is now fully funded, and again moving forward to the normal paperwork and things that have to be done by way of admin. So thank you for all those who supported that. The Ask John question, I think we'll just hold this one then to next week, or in case he comes in a few minutes, we can come back to it. Let's not waste time on that one now. So my normal CEO on the road update, which I do from time to time. As those who've been following us, so we've been in England, what, 3 times, maybe 4 times now since Christmas. meeting various people and doing site visits. And 2 Fridays ago, I was at the UK Property Angels event, and you can see along the top there some of the people that were at the event also. Some of you might remember Rachel from the Duke Street project. She had JV'd with Andy and Tina. Sven works for Target 5. We'll come back to Lars in a minute. Mike Bristow of Crowd Property. It was good hearing him and his update on the market. Andy Babayan from Target 5, one of our fundraisers. Ranjan, quite high profile. So it was really interesting just to hear from what's happening in the market from all these different perspectives. There was a nice meal on the Friday night, and it just so happened I got sitting beside someone that I'd heard about for probably about 5 years. Never talked to him, never met him. Had always intended to reach out at some point, but just it hadn't happened. And then the next day he was presenting, and interestingly, he presented using a white background with black writing, no graphics, just simple text on a white background, which I thought was very interesting, and definitely bucks a trend. And that person I'm talking about is Lars Singleton, who is our special guest today. So Lars, absolutely delighted, first of all, to have met you 2 weeks ago, and of course delighted to be able to join us today.
Likewise, it's very nice to be here. Thank you.
No problem. So let's now hand over to you. So usually just give you a chance now to talk about yourself, explain exactly your background, maybe, and then your journey into what you do now with Empowered, and then we'll get into some of the questions.
I always worry about sort of doing sort of the me and what I do sort of thing. It is what I do is, for me, it's fun. So just a very quick run through the sort of the CV, as it were. Co-founder of Empowered Pensions and founder of Empowered Trustees. What do? We help small businesses set up and run their own pension schemes. And it will be the type of pension scheme where you are literally in charge. You are literally going to Hmrc and saying, I want to be a pension provider of my own. I want to have all the sort of the freedoms that Hmrc allow, because my alternative is to go to an insurance company and they don't quite do what I want to do, sort of thing. So that's what we do. We have around about 800 schemes. The sort of number fluctuates. We tend to put on around about 100 schemes a year. That's sort of been accelerating, and that sort of gives us around about sort of 450 million assets under management. For my sins, I've also been a ghostwriter and technical editor to some of the books that people may have seen popping up on Amazon and the like. My background history is I've been a financial advisor for 22 years. I started out in a very small practice, and I sort of topped out as a global head of advice for Aria Capital Management, which is a global sort of wealth management company, stretching mostly for high net worths across the sort of Middle East and Far East, but also some UK. So I've sort of done it, bought the t-shirt, advised on it, and then I sort of settled into SSAS, which is our main business now. So what we do, we help people really take control of their pension scheme and hopefully make good results out of it.
Excellent. Okay, well, thanks very much for that. And again, it's one of those topics, I think, SSAS pensions, that people hear about. They've maybe read something about it, but there's very few people, we call them experts or experienced. So I think it's one of those topics, Lars, where a little knowledge can be dangerous, because you might read an article and then think, okay, this sounds great, but I'm sure there's a lot of moving parts and things to be aware of, particularly around the area of regulation, which I'm looking forward to getting into. So again, remind everyone, some good questions have come in already. If you have any questions, it's a brilliant opportunity to put your questions live to Lars, someone who eats, sleeps, breathes SSAS pensions. So for sure there's a great opportunity. So get your questions there. Now, what we're going to do, as we normally do when it comes to guest time, is I'll show you the kind of the main questions we're gonna cover, and then we'll come off screen. So one thing I do also want to point out is that Leo crowdfunding, right now we do not have the facility to have SSAS pensions fund or equity deals. So just to make that really clear, this is a discussion about property in general this morning, as we do from time to time. We've brought on senior debt brokers, with people involved in loan notes and things like that, which aren't specifically relevant to Leo crowdfunding. And again, this is one of those topics. So just to be really clear, we do not have the facility currently to have SSAS pensions fund deals on the Leo crowdfunding platform. So there's what we're going to cover in the time we have. What exactly are SSASs? What are the benefits of SSASs in general? What can SSASs invest in? And then particularly, we're going to spend time on SSASs funding commercial property projects and how there is the potential to do some residential properties. That's going to be the interesting part. So let me come off the screen, and then we can get sort of straight into it there. So yeah, do you want to just very briefly explain, Lars, what exactly is a SSAS pension?
Sure, thank you. So there are many choices that people have in terms of pensions in the UK. So at its very simplest, it is a UK registered pension scheme, which means it has all the benefits of the normal personal pension or self-invested pension that people may be familiar with. So you can put money into the pension, either yourself or your employer, and you gain the tax relief on those contributions. Now, if because it's a company pension scheme and not a personal pension scheme, obviously you have to have a business that goes with it. So that's sort of your starting point. If you are a business owner, then this is one of the options you have available to you. It's a pension scheme where you can have a number of people join you in that pension scheme, and you can have up to 11 sort of co-members with you. One of the benefits of that is that you collectivize a sort of a big group of folk, and you're acting together to make investments that you may not be able to have done on your own part. And it's very important when it comes to things like sort of purchasing of commercial property and things like that. But it's a way of effectively starting your own investment business, and this is the fun side of it. It's set up under trust, which means that from the very moment that you start it, you are outside of inheritance tax sort of problems. All the money that you put into it is outside of your estate. So were you to die, then that's free of inheritance tax in the most part. Also, being in trust, it means that if your company gets into trouble, then it's not assets that creditors can attack, unless of course you've committed a little bit of sort of faux pas by putting money into the pension scheme when you knew you were going to go back, go into administration. Those are pretty much your main thing. So you are going to Hmrc, as I mentioned, you are saying, I want to set up and run my own pension scheme, and I want to use the full suite of rules that Hmrc allow. And that is literally everything. You can do pretty much anything you like in a pension scheme where you use the full access of Hmrc rules. Now, there are two areas that they don't like, and they stop you from investing those by hitting you over the knuckles with a big stick, and that's a tax charge. So the two areas that they don't like are tangible, movable property, stuff that moves. The thought being that if it does move, or if it can move, it probably will do. And this is a pension scheme, so it has to be there in the future. So things like cars, wine collections, stamps, all those sort of weird and wonderful things that people might want to invest in, those are out, unless they're part of what is called a trading concern. So you can buy sort of shares in a company that has those things in it, but it has to be a trading concern. That's one of the sort of dispensations. So tangible movable property is a no-no. Residential property, ordinary houses, ordinary folk living in those houses, they are also a no-no. Market distortion effect, if you have all the money in pensions sort of flowing into the property market, it's going to have a sort of issues there. So what is it? It's a company pension scheme. What can you do with it? Invest in pretty much anything, with those two notable exceptions. You can accumulate a significant amount of money without any tax to pay, so it grows without tax. And in the future, it provides you with that pension that you're hoping is going to see you to the end of your days. But the key thing that people invest in, or people use a SSAS for, is how it interacts with you and your wealth creation process. So you're a business owner, you make profit in your company, you make a contribution by your company, and you can put in some pretty significant amounts of money, put that into your pension scheme, and then the very following day you can theoretically borrow up to half of that back with a number of safety guards on that money. So literally make profit, put it in your pension, following day borrow it back, grow your business, accelerate your growth. And in the meantime, the growth on that loan is free of taxes. You've obtained the tax relief. It's protected from creditors. It's like you're being your own bank.
Okay. Well, you've sort of mentioned their tax and the fact you can loan some money back out. Are there any other sort of benefits, or what would you highlight as the main benefits then? Any other than those two, or are they the two main ones?
The go-to reason for a SSAS is the ability to borrow that money back. But also, if you buy commercial property, you can then use that commercial property for your own business. Now, you have to pay a market rate for the use of that property, but effectively you're securing your trading premises. If you don't need to use all of the space that's in that commercial property, you can sublease part of that, and we have clients who do that, sort of in a grand way. They buy a commercial property, they lease it back to their company, and then effectively run a serviced office from it. And all the additional profit of running that serviced office, that falls into the hands of the sponsoring employer, making more money for the parties. And then, of course, the sponsoring employer has to pay this, the pension scheme, its market rate. But generally, there's a good leverage or good differential between the two, and therefore it's sort of money for today as well as money for the future.
Okay, so on that money being loaned back, so Mr. Business Person puts his profit into a SSAS, loans 50% of it back out. Can they then invest that money they've loaned out of the SSAS into property?
They can, yes. It's probably a good idea just to quickly go over the 5 key tests that Hmrc require, and then what you get for it. Okay, so the first thing is you can't use more than 50% of the fund. So you can't, over sort of concentrate in the sponsoring employer. Only half the fund can go into the loan. The second thing is it has to be secured by a way of a first-ranking legal charge. So a charge on real estate, a charge on a business, a charge on something that's worth at least the amount of the loan, obviously, plus the interest on the loan. So it's not 100% LTV, it's not 100% loan on whatever the security is. There's got to be some equity in there as well. The third test is that it's a short-term loan. It's a business loan. It's 5 years, or up to 5 years anyway. Can't be any more. If the company gets into trouble, then there are some rules to allow some flexibility at the end of that 5 years. But it's a 5-year loan top end. It's also got to be a repayment loan. So you've got to make repayments during the period. So it's not terribly good as a long-term funding vehicle, because you've got those blocks of capital that are going to go back each year. And the 5th key test, and this is the easy one, you can lend, and the minimum interest rate that you need to charge is 1% above base. Now, base is pretty low at the moment and has been lower, but still pretty low. But gaining a commercial loan to your business, even secured at sort of 1.752%, is pretty rare. Certainly, I've never been able to acquire that sort of interest rate. So it's pretty niche in what you can use it for. The sort of the factors about the loan, it does constrict what you do with it, but it's there, and you can literally walk into the room, know that you've got that money available to you. Now, achieve those 5 key tests, and whatever the business does, that's what you can use the loan for. So if it's making widgets, you need a bigger widget machine, fine, no problem. If it's fixing commercial fridges, excellent. You can use it to buy vans, you can use it to buy tools, it's stock, etc., etc. If you are a developer of property, buy, develop, sell, no problem. You can use it there. The key question that most people sort of raise when I start talking about property development is, can I secure it against residential property? And the answer is yes, but there are some key sort of issues to resolve, because when you secure it against that residential property that you're developing, which you can do, there are two areas where HMRC have concern. If the pension scheme expends money, if it pays to acquire that security, that's a problem. So you always make the borrower pay the fees, and then that problem sort of goes away. And then at the end of the loan, or some point during the loan period, it's possible that the loan will default. And if the loan defaults, well, the security is there for the benefit of the SSAS. And anecdotally, you might think, well, hold on a second, that means that if I have to collect that security, I'm going to end up with residential property in my pension scheme and cause myself a tax charge. And there's some very, very well-tested and it's very, very standard procedures to avoid that sort of problem. And effectively what you do is, like all the banks, you appoint an independent third party to manage that process on your behalf. It's called a security agent. The security agent takes control of that property, deals with the problem, resolves the issue if it can be resolved, or sells the security and then pays back the pension scheme. So can it be used for residential property development? Yes, it can. Does it need care? Yes, it does. But it's something that you can certainly do.
Okay, no, fantastic for that. And we'll maybe mention at the very end just some other ways in which residential property can be invested in. Before we go to the questions, just in terms of the breadth, you've mentioned a couple of things that SSAS can invest in. How wide is that list of things that SSAS can actually invest in?
It is extraordinarily wide. If you want to, I mean, is the question of there's so many things you can invest in, but the real question is, should you invest in them?
Yes, of course.
So for example, the starting point is you've got all the choices of the FCA regulated world. You've got all of the funds that you would find in a personal pension or a self-invested personal pension. You've got all the shares on every listed market you could think of. And then you've got all the other stuff. And the other stuff might be hedge funds. It might be crypto assets. It might be foreign exchange. It might be gold bullion. It might be lending to other third parties, sort of business colleagues or people that you have in your business network. Literally it's that broad. But as I said, the real question is look at the assets that you're thinking about investing in, decide whether you have enough knowledge to assess the risk to capital, and whether or not there is enough return, and whether there are any mitigations, and be rational. I mean, it's your money. It's hard enough getting the money into the pension scheme. To lose that money because you're maybe not paying as much attention to risk as you should be. It's the serious, I was going to say the downside, but it's the serious responsibility of taking control. It's almost a Spider-Man quote: with great power comes great responsibility.
Yeah,
there is nobody else there apart from you. You're the trustee. You're deciding this. You set the rules. So
it's a really good point you make there. It's still investment. The fact that you control it, you still should be making a proper investment decision, looking at risk, looking at reward, looking at the factors involved. And I was almost finding myself there of all the days that John wasn't able to make the broadcast. I would love to have seen his face when you mentioned cryptocurrency, the fact you can invest in cryptocurrency, because John and I usually have, if we do butt heads, we butt heads over crypto. We have the different views on that. It is an asset class, but as you would probably point out, it doesn't mean it's necessarily a good asset class to invest in. But John sometimes argues it's not even an asset class, but that's one for another day.
It is, and honestly, I have I wouldn't say arguments. I have discussions, and sometimes sort of fairly sort of intense discussions with clients. They say, look, I want to invest in foreign exchange, and I'm like, oh, okay. Are you a foreign exchange trader? Do you know these things? Or I want to invest in Ethereum or Bitcoin or some of the sort of more wild and wacky sort of crypto assets. And honestly, I actually don't know whether it's a proper asset class or not, but it is a thing of some value. Someone puts a value on it. It is not something which is barred by HMRC. So, by virtue of the fact it's not barred, it is available. It's not tangible. So it's very obviously not tangible. But could you do proper risk metrics on it? I have no idea.
No, that's an interesting one. Okay, time's moving on us here. So let me go through these quick questions here. So, what are the restrictions, if any, for a SaaS to invest via crowdfunding? Have you come across much of, now obviously, primarily it's in the debt platform. So, have you come across clients that do use crowdfunding peer-to-peer or debt platforms for their investing?
Yes, it's one of the many sort of types of investments that our clients invest in. It is pretty much the probably the third most popular, I think. I'm allowed to mention competitors?
Oh yeah, certainly. This is a very
Okay. Okay.
open forum.
So, I mean, you mentioned Mike Bristow. So,
Yeah.
the first interaction I had with peer-to-peer crowdfunding was Thin Cats, and then very quickly followed on by Crowd Property. And it's very clear that there are some great benefits of the sort of peer-to-peer crowd thoughts. The ability to commit a reasonable amount of capital to a debt project and gain the value of a first ranking fixed charge. That's your security measures. It's usually sort of a reasonable percentage of value as the security. All of these things are good markers for risk metrics. The areas that cause some concern are when the project is going to be a buy, develop and hold. So effectively it's evolving a project which is to an investment company. If that is the case, then certainly sometimes the structures of platforms either can help, i.e. they demark between the lender and the borrower. So there's effectively a sort of fire break between the two. Or if they actually, if they don't do that sort of demarcation, then you're literally lending directly to that borrower. Now, if it's to an investment company and that investment company then uses the money to purchase taxable property, that's going to be a problem for the pension scheme. But generally, the projects that we see are buy, develop and sell, or refinance, or move within the group. Those sorts of trading concerns are acceptable to HMRC. They don't cause that tax problem, and that is your main. If you want a rule of thumb, buy, develop, sell, not a problem. Buy, develop, hold. Have a very serious word with your scheme administrator, because you could be putting yourself in difficulty.
Okay, no, thank you. What's your opinion on how you can use SSAS for Class MA purchases? How can we synergize the strategies? I think it's what's been asked. Yeah.
This is where I have to put my hand up. So I'm not a property expert. So I'm gonna answer as best I can. Now, MA is the new rules on commercial property, the development, evolutions, change of use, that sort of thing, as I understand it. So the issue is again back to that situation. Are we going to buy a commercial property and literally own that commercial property, then convert it into residential fit for human habitation? That's idea number one. If you do that, then at some point or other on building control final sign off, you're going to end up with residential property fit for human habitation. Well, you've now got residential property owned within your pension scheme. Then we have a problem. If you were to sell that prior to that final sign off, problem goes away. if you bought a commercial property, got the change of use and took a planning gain uplift, or sort of, you know, a split between the two, then yeah, you could do that, because then you could say, well, I've got my planning gain uplift, I sell that to my company develops it, my company makes a bucket of money, I just happen to have used the pension scheme as some sort of land banking, you know, sort of funding vehicle, whilst I got all my ducks in line ready to do the development. That's perfectly possible, and we do many of those. Shops and tops, we've done those for donkey's years. Very often we buy the commercial property and hold that within the pension scheme until such time as the client decides what they want to do with it, either to continue to hold it as commercial or to evolve it into residential, and then we go that other route. And then the tops, you can actually use the loan back to actually do the final funding. So the combination of buying the commercial in the SSAS, and then using the loan back to create the bridging finance for the residential uppers. Very powerful combination. Do those. I wouldn't say every day of the week, but you know, once a week we do one of those.
Okay, no, thank you for that. Okay, last question for the day then before we wrap up. It's kind of got a couple of questions within the question. So, hi, is it possible to hold these unlisted equity assets within a SSAS? That's for the first question. If so, which SSAS providers permit this? And are there any restrictions? For example, do they have to only make up a small percentage of the SSAS total assets? So sort of three questions in one, which I suppose independent of each other. So is it possible to hold these unlisted equity assets within a SSAS? I suppose is the first question.
Short answer, yes.
Okay.
Slightly longer answer is always know what you're buying and whether it's actually worth the price that somebody's trying to sell it to you for. And this is where we tend to sort of have, I wouldn't say butt heads, but this is where we tend to have a little bit of a sort of, again, maybe a slightly robust conversation with the member trustees, because they've got the idea that this thing is actually worth, you know, X 100,000 or X 10,000 or whatever. And then we say, okay, well, that's fine, that's what you think, but let's just play the other side. Are we buying something that, you know, definitively is worth that amount of money? Tell me, as your co-trustee, because I sit as the corporate trustee, tell me why we're paying this much money for it. You know, it's literally, you've done the due diligence on this business, because without that you wouldn't want to buy this thing. But have we delved into it enough to know that we're not buying something which ends up being a you know, smoke and mirrors value, and we end up with you know, nothing, you know, in the pension scheme? Because you and I don't want that. You don't want it because it's your money. I don't want it because, you know, it's not a good outcome for you. So short answer, yes, but there's always a slightly longer answer to it.
Okay, and yeah, I've no doubt it's probably worth people reaching out to you directly to really delve into either personal circumstances or scenarios. Are you able just to mention, just says any SSAS providers permit this? Is it which ones? There's
a fair few that do. We do. That's the only sales pitch you're going to get from me.
That's the obvious answer.
Yeah, there's folks like Retirement Capital, Whitehall, SSAS practitioner, although they're a practitioner, not a scheme administrator, and there's a sort of fair balance of a fine balance between those. Yeah, there's a fair few. But the thing, sorry, let me just say, if you're considering a SSAS, I mean, don't just accept my word for it. Interview your potential SSAS administrator. You have to have a plan. If you don't have a plan, you're likely to fail. And remember, you're starting effectively an investment bank. So have a business plan. It's got to be robust. It's got to be well thought through. Then take that plan to your potential scheme administrator and say, look, here's my plan. This is what I want to do. Would you support it in full? Because they might be willing to do part of it, but not the other part. And then once you've got your interviews, you know, all sorted out, and you've decided which one you want to work with, the answer is obvious. So the one thing I would say is go to the AMPS website, and they will have all the list of scheme administrators that do SSASs. So that's AMPS, AMPS. Okay.
That's fine. So before we wrap up here, we do need to mention GDCV, genuinely diverse commercial vehicles, and how that does allow potentially, I'll use the word potentially, a
Yep.
great word when it comes to regulation, potentially, allow for a model where SaaS money could go into as equity into deals. Can you in about 30 seconds at least just sort of whet the appetite of people as to that possibility?
Yes. Okay. So 30 seconds. There are three types of vehicle trading entities or entities where other taxable property is allowed. Okay. So your movable stuff and your residential property. There is the fund, and that's the REIT, Real Estate Investment Trust. That is a GDCV. Buy residential property and that, bing, no problem. Then there is the ordinary company that does ordinary things. It has desks and cars and the office cat and that sort of thing. Now you can buy shares in that company. It's going back to the unlisted securities. If it is a trading concern, the things that were going to be taxable property are not taxable property, and that does include residential property. So again, it comes back to buy, develop, sell. As a company, you can own the shares in that, not a problem. If it's an investment company, buy, develop, and hold, then that's going to be a problem. Just think, is it actually trading? If it's trading, it's likely to be okay. And then you can take it to your scheme administrator, say, here's my plan. What do you think?
Yeah, fantastic. And again, that was a sort of a deliberate sort of leading question at the end. Some of the attendees I know on here today are quite experienced in the SaaS world or have their own SaaSes, and I frequently keep getting asked, Lars, about, you know, can we deploy SaaS funds as equity, not as debt? And it's not something that's done that often, but it's something that we're obviously having conversations about, and it may be in the future a solution can be found for that. So again, just to remind everyone, right now the Leo crowdfunding platform, SaaS pensions cannot deploy into equity right now on our platform. So just making that really clear, so there's no confusion. But it's something that we're certainly looking at for the future. So listen, Lars, really appreciate you coming on today. I know you're an exceptionally busy man. I think that's been a really good sort of fly through the SaaS world, and you've raised a lot of interesting points there, and it's great to be able to give people a chance just to put questions to you. I see one more is right in there, but I think no, that's fine. We're going to have to just get on. So okay, so literally wrapping up, I'll give you like one sentence at the end, Lars, when we finish. So next week, absolutely delighted to have Pam Lindsay, who's coming on. I think it's actually on today as an attendee. Pam's very high profile on Clubhouse at the minute. I've known Pam for a number of years. Her and her husband both work in the world of property. I've enjoyed a cup of tea and a fantastic house that they built together. Really phenomenal sort of modern design. And Pam's coming on next week to talk about brand building for property developers. So really encourage you next week. You're not going to want to miss Pam. Full of energy, full of experience, and she loves sharing things that she's learned and empowering other people. So we're in for a real treat next week. That's Pam Lindsay joining us. Again, reminder that we rescheduled the Fundraiser Live Bootcamp with John and myself. It's now the 5th, 6th, and 7th of July. The link there, raising-funding.com/class, will take you to a landing page, which will give you all the information you need on that. It may be we need a wee session on SaaSes for that, Lars. So I'll maybe reach out to you and see if you can give us a little bit of time on one of those days. But this is really for any property developer fundraiser who wants to raise funds legally, understand compliance, understand the sort of the deal structure, understand the capital stack, investor psychology, all those things that feed into being a good compliant fundraiser. So if that fits the bill, you can jump on there. It's $297 for the 3 days, and there's currently an early bird of £100 ticket off that. So $197 if you book before the end of June. And as I mentioned last week, I am currently in preparation for launching a podcast. Really excited about this. John and I did a dry run on Monday, which was really interesting. So this is going to be called the Property Funding Podcast, specific to the areas that are involving around funding of property deals and all the different areas around that. I'm really looking forward to having on some fantastic guests have lined up already. This is going to be really exciting when we get this launched, and really valuable, I think, for those that choose to tune in and listen to what we have to say. So that is us for today. Really appreciate Lars. Lars, I'll give you a 30-second wrap up or anything you want to comment on.
Well, I mean, hopefully it's been useful for everybody. I'm just really pleased that I had the opportunity to meet you a couple of weeks back, and I'm hoping that we're going to be able to work sort of closely in the future. And thank you for this morning.
Fantastic. And people can get you how? Via LinkedIn? Is that the best way to do?
At Facebook, message me through Facebook. We still are old school. We have a phone. We're on the web. So www.empowerpensions.co.uk, and just reach out. We'll be very happy to chat.
Yeah, and if anyone can't get hold of Lars, come to me and I'll put you straight in touch. There's no problem. So listen, thanks everyone for joining. In about 30 minutes, this will be on our YouTube channel. We'll send the link out as normal, and feel free to share it. And if you haven't already, make sure you subscribe to our YouTube channel. Thanks everyone. Absolutely brilliant. Thanks, Lars. See you all again next Thursday. Bye-bye.
Thanks very much. Thank you, David.